What are sectors and industries? When people talk about the stock market, you'll often hear them mention sectors and industries. These are ways of grouping companies that do similar things, making the market easier to understand. A sector is a broad category like technology or healthcare. Within each sector, you have industries which are more specific. For example, inside the technology sector, you'll find industries like software, semiconductors, or IT services. Why does it matter? Knowing about sectors and industries helps investors see patterns. If one industry is booming, such as renewable energy, it can lift the whole energy sector. On the other hand, if an industry faces challenges, like travel during the pandemic, the entire sector might struggle. For everyday investors, this grouping is useful because it lets you compare apples with apples. For example, you can see how one bank is doing compared with another in the financial sector, rather than comparing it to, say, a supermarket. It also matters because money in the market often rotates from one sector to another. In growth periods, investors may rush into technology, while in downturns, they may prefer defensive sectors like healthcare or utilities. This rotation shapes the mood of the market. Here's a simple example. Imagine the economy as a big supermarket. Each aisle is a sector: food, cleaning supplies, or electronics. Within each aisle, the shelves are the industries. For instance, in the food aisle, you have cereals, dairy, and fruit. If cereal sales soar, that's good for that industry. But if fruit prices collapse, it might bring the whole food aisle's numbers down. The supermarket as a whole, the stock market, will reflect all of these ups and downs combined. What else should you know? There's actually a system called the Global Industry Classification Standard, GICS, which divides the market into 11 sectors such as financials, consumer staples, and energy. Each of those sectors then breaks down into industries and sub-industries. Major stock indexes like the S&P 500 or the FTSE 100 are split into these sectors too. Technology currently makes up a big slice of the S&P 500, while the UK's FTSE 100 leans more heavily on financials, healthcare, and mining. So, depending on where you invest, you might be more exposed to one type of business than another. It's also worth noting that some companies don't fit neatly into one box. Take Amazon, for example, is part of retail, but also a huge player in cloud computing. This overlap sometimes causes confusion. A note on diversification. It's easy to think you're diversified just because you own several different stocks. But if they're all in the same sector, say technology, they'll often move in the same direction. Real diversification usually means spreading your investments across different sectors, like consumer goods, industrials, and utilities, and sometimes even across different regions, such as the US, Europe, or Asia. That way your portfolio isn't tied too closely to the success or struggles of just one industry or country. To sum it all up, sectors and industries are just different levels of categorization for companies in the stock market. Sectors are broad, industries are more specific. They help investors understand trends, spot risks, compare companies fairly, and build balanced portfolios. Thanks for watching this video. Not sure where to go from here? You don't need another video, you need a plan. Grab the free 5-day series below and start investing with confidence. The link's right here on screen and in the description. Don't miss out.